Hello, good evening.
Good evening, sir.
Yeah. All right. Our class tonight, we should be rounding up on the topic capital reconstruction. And business reorganization. This topic was started last week on Monday. We introduced the concept of capital reconstruction. A situation where a business is experiencing financial crisis. And the company's management must take actions to prevent liquidation of the company. The directors of the company.
That's a business. So please, I said I'm in class.
Rosemary, please, can you mute? When you get to class, please help us to mute your speaker. The company's directors must identify ways to prevent the business from collapsing. And we said one of the actions that could be taken is to go into capital reconstruction, to try to reconstruct the company's capital base. We explained that the objective of capital reconstruction is to find a way to allow the companies to continue in business and avoid insolvency. Please, 1 minute. All right, let's continue. That the objective of capital reconstruction is to prevent liquidation of the company. We discussed this. We discussed the principles of capital reconstruction. We also discussed the steps. Thereafter, we solved question number 1 last week. Please, can you mute?
Taiwo.
You can mute them from your end, sir.
If I can, I will have done that.
Taiwo,
can you mute, please?
Taiwo, Paul.
Taiwo Paul, mute your mic.
No intergender, make you come on now.
Taiwo, can you mute your mic?
Taiwo, you no woro, mute your mic, oh, I beg.
Na ya no worry ade o.
Taiwo has not muted.
Please, others, mute your mic. Let's go on with the class. Jadisola, please, can you mute your speaker? Let's go on with the class.
Sir, can you remove these two questions from the list?
Please, Adiyemo, please, can you mute your mic? Let's go on with the class. So we look at question 1 last week. Fortunately, on Saturday, we are able to complete question 1. That's a plus for you guys. Tonight, we are going to take one more question. We are looking at question number 2, page 104. Ebu Bank. Please, can we refer to page 104, question number 2. All right. The man is not aware that his speaker is on. He has joined the class and he's not even part of the class. Because if he's part of the class, he will have known that we have been calling his name. Mr. Paul Adeleke, please mute your speaker. He's not part of the class, really. All right, we live with it. There are some risks. You don't have solution for them immediately. You have to live with it like that. Outreach. Ebu Bank. On 24th April 2019. On 24 April 2019, Ebu Bank received the following statement of financial position. I'm trying to call the guy self. receive the following statement of financial position prepared for its customer. Second limited. Look at the statement. Look at the statement. Non-current assets. Freehold property, 20 million. Plants, 172 million. Current asset inventory, 57 million. Receivables, 26 million. Next, we have the total assets, equity, issue share capital, 50 million. Reserve, 23 million. Non-current assets, 10% loan note, in bracket, secured on freehold property. The loan note is 50 million. Others, please mute. We are still trying to deal with Taiwo's problem. Akinwale, your speaker is on too. Taiwo has been creating problem for the class. The speaker is on, we have been calling him. He's not muting. What can we do? You join the class, then your speaker is on. Let me just continue with my class. Please, can I have the host rights? Some students will join the class, the speaker is on, and they are distracting the class.
Okay, so you have been made the host, so you can remove anybody
Yes.
that is disturbing you.
If I have the host, I can mute from my end. Thank you. All right, let's go on with this. We have current liabilities, bank overdraft, sundry payables. Now, please note, examiner says loan notes secured on freehold property. That is fees charge. A liability secured on a particular asset of the company. That becomes fees charge. Now let's go on. Second Limited is a long-established company which traded profitably until a few years ago, following the expiration of exclusive patent rights on a particularly profitable product line. Results declined dramatically over the last 12 months. The company's cash flow problem have steadily increased. The overdraft facility at present stands at 45 million and carries a second charge on the company's freehold property. This was the question somebody asked me on Saturday. We have two liabilities secured on the same assets. We have two liabilities. These liabilities are secured on freehold property. We have 10% loan notes secured on freehold property. We have bank overdraft facility, bank overdraft liability secured on the same freehold property. But one has first charge, the other has second charge. A meeting has been arranged to consider the company's future. The above statements of financial position will be presented at the meeting, and the following proposals will be discussed. Proposal 1, immediate liquidation of the company. In these circumstances, it is estimated that the freehold property will realize 65 million, plants 21 million, inventory 40 million, and receivables will pay off in full. Preferential payables included in the statement of financial position figure for payables amounted to 27 million. That is proposal 1. Proposal 2, Bio Limited has made an offer to take over the entire business activities of PL. Under the terms of the offer, Able Bank will receive 80% of the balance due, but repayments will not be made until exactly 1 year from the date of the creditors' meeting. No further interest will be considered to accrue on the balance due to Able Bank during the 12-month period. Proposal 3, reorganization, capital reconstruction. The management of PL is planning a reorganization of the company's activities, which will restore profitability to a reasonable level almost immediately. The reorganization will be linked with a capital reconstruction scheme. Under this scheme, the existing shareholders will be asked to accept 2 1 naira shares in exchange for every 5 shares currently held. The bank will be asked to accept 10 million 1 naira shares as consideration for 1/2 of the present overdraft. If this proposal is acceptable to creditors, the shareholders, as indicated, please hold. Let me expand this. If this proposal is acceptable to creditors, the shareholders have indicated their willingness to take up a further 30 million ₦1 shares for cash, and the balance remaining outstanding to Able Bank will be repaid from the proceeds of this issue. The directors are confident that if this proposal is put into effect, profit of 40,500,000 per annum will be earned for the foreseeable future. Of which 2/3 will be paid out as dividends and the remainder reinvested. Assume, note, assume that bank earns 15% per annum on all its lendings. And that the amounts in the statement of financial position include interest that accrue to date. That amount in our statement already include interest that accrue. Assume for convenience that any proposal adopted, that any adopted proposal, will be implemented immediately, with payments received immediately. Unless otherwise stated. Ignores the expenses of realization and liquidation, and assume that no changes have occurred between April 20 and April 24. Requirements A. Calculates the amounts Able Bank will receive under each of the three proposals. Now let's explain this question. We have a bank, Able Bank. Able Bank has given overdraft to a customer. The overdraft amount is 45 million. The customer's name is Pecon Limited. Now, this customer is in financial crisis. The customer is experiencing financial difficulties. And management is considering 3 options. The company is experiencing financial crisis. Management of the company is now considering 3 options, 3 proposals. Proposal 1 is that let us liquidate the company and sell the assets. That's proposal 1. Proposal 2. Tire Limited has offered to take over the company. Another investor has offered to take over this company. This company financial crisis. Then option 3. I can mute Taiwo now. Option 3. Capital reconstruction and business reorganization. Now the question is, for each of these options or proposals, examiner says calculate the amount able bank will receive. Assuming the company is liquidated and the asset sold, how much will able bank receive? That is proposal 1. Proposal 2. If this company is taken over by Tire Limited, assuming another investor, Tire Limited takes over Pecon Limited, how much take over now? Acquisition. Look at it. Tire Limited want to acquire Pecon Limited. Meanwhile, Pecon is owing a bank money. Now the question now is, if Tire Limited takes over Pecon Limited, how much will Able Bank receive? We calculate. The third option, capital reconstruction and business reorganization. If capital reconstruction is carried out as suggested by the directors, how much will Able Bank receive? This is the question examiner is asking. So please, in exam, no matter the speed or the time you are, or the time, it is important to understand the examiner requirements. What am I expected to do? All right, let's go to this. Please, Let us open the question on our phone or our laptop. Even on my phone. I have to open it on my phone too. That will reduce straight up and down. All right. Allow me to copy this. All right. I can pick my pen now. Proposal A. Immediate liquidation. If the company is liquidated, how much can we realize from the assets? Examiner says, in this circumstance, it is estimated that freehold property will realize 65 million. Look at it. Realization. I'll put in brackets, non-charge assets. Non-charge assets. Freehold property has been used as a charge for two liabilities. So keep that aside. Plants will realize 21 million. Pick it. Plants. We are going to realize 21 million naira if this company is liquidated. Inventory will realize 40 million. Inventory. We are going to realize 40 million. Receivables will pay up in full. Now go and check your statement of financial position. Our receivable value is 26 million. Now please sum up. Total realization, non-charge assets, total.
87.
If you sum this up, we have 87 million. You keep this. If the company is liquidated, our non-charge assets, assets that has not been used as collateral, we are going to realize 21 million from plants and machinery, 40 million from inventory, 26 million from receivables. Total realization, 87 million. We move on. Now, realization from charge assets. Realization. charge assets that are old property. $65 million. You are going to separate the two. Assets that has been used to secure a loan. That asset will be separated from assets that is not used as security for loan. Freehold property has been used as collateral for two liabilities. Now go back to the question. Because for somebody on the road, somebody like Taiwo now, that is on the road, look at this now. 10% loan secured on freehold property, 50 million. I was telling this. Again, look at this. The overdraft facility at present stands at 45 million and carries a second charge on freehold property. Two liabilities are secured on the same asset. But one has a first charge, the other has second charge. In the event of liquidation, any money realized from that property must be used to settle the liabilities that is tied to it. We now come here. Settlement. Settlement of fees charge. Fees charge secure creditors. Settlement of fees charge. Fees charge secured creditors. One, the first person. First, loan notes. Amount is 50 million. Out of this 65 million, money realized from the sale of property, we are going to settle loan notes. Please note, loan notes is like bond, a debt instrument that the company issued to borrow money. 65 minus 50. We are left with 15 million. We now bring the second charge. Bank overdraft. Able Bank has given overdraft to this customer. The amount is 45 million. This 15 million balance will be used to pay part of the 45 million. Outstanding balance. $30 million. outstanding overdraft. We have settled 15 million. Bank will claim this outstanding as unsecured creditors. Able Bank we claim the outstanding balance as unsecured creditor. If you look at this, we have started distribution. If you look at this now, after the asset has been sold and money realized, we now go into distribution. The first person that we collect is fees charge secure creditors. We have treated that. After fees charge, we now look at preferential creditors. Our preferential creditors. Go back to this question. Look at proposal 1. Examiner says preferential payables included in the statement of financial position figure for payables. We have preferential payables, that is preferential creditors, amounted to 27 million. In this question, we have preferential creditors. We now return here. Out of this 87 million, look at the workings. Realization, non-charge assets. We realize 87 million. Out of this, we need to settle settlements. We need to settle preferential creditors. Settlement. We need to settle preferential payables. It's also called preferential creditors. The amount is 27 million. That means we are left with 60 million. Now you observe that you cannot just go and give bank money. The outstanding money of the bank, 30 million. Bank cannot just go to any other asset because it's a fees charge. Because it's a fees charge, Able Bank cannot move directly to other assets. You have to go and queue with unsecured creditors. We have treated preferential payables. We have settled them. After preferential payables, we now have floating charge secure creditors. After preferential payables, we now have floating charge secure creditors. For this question, we don't have floating charge secure creditors. Who is next? Redundancy payments. For this question, there is no redundancy payments. Then number 5 on the list is unsecured creditors. Now come here. Why not? If you have question, raise up your hand and ask your question.
Okay, good evening, everyone. Thank you. Please, I don't know how we get the value of that 87 million.
You left a class. I just joined the class, Zoom user.
No. I've been part of the class from the onset. Yeah.
And that means something happened.
Okay.
Look at my first working year. Realization.
It's okay, thank you.
Non-charge assets. And I also put it here. Realization non-charge asset equal to. So please feel free to ask your question. We now come to unsecured creditors. Let's go back to the statement. We have treated overdraft. Now look at this. Sundry payables. Amount is 117 million. Your sundry payables. That includes your trade payables. $170. Examiner now says, look at here, please. Examiner says, preferential creditors included in the statement of financial position figure for payables. That means out of that 117 million, we have, out of that sundry payables, 117 million, we have preferential payables included, 27 million. We have settled preferential payables. That means you are now going to less 27 million from 117 million.
90 million.
Yeah, thank you. If I return here now, now do like this. Other sundry payables. We have 117,000 minus 27,000. We are left with 90. You can close this. Then we have bank overdraft outstanding. Bank overdraft. Overdraft. bank overdraft, outstanding, 30 million. That means total unsecured creditors. Total unsecured credits. Unsecured creditors. 120 million. Our balance is 60 million. And we need to settle 120 million. Obviously, available cash is not sufficient. We now need to prorate. Share of available balance in bracket 60 million. Sundry payables we receive. Sundry payables we receive 90 million over 120 million multiplied by 60 million. If you work that out, that will
25.
give you 45 million. Why? Bank overdraft, bank OD, we receive 30 over 120, 30 million over 120 multiplied by 6. Bank we receive 15 million as unsecured credit. Total amount received by the bank. Total amount received by able bank. Proceed of freehold property. Bank will get 15 million. From the freehold property, bank will get 15 million. Share as unsecured credits. Unsecured credits. Bank will get 15 million again. Totaling 30 million. So if this company is liquidated immediately, if the company is liquidated immediately, bank will receive 30 million naira immediately. This is proposal 1. Bank will receive 30 million naira immediately. Any question, please? We have treated proposal 1. And please note, each proposal is independent. You can either do proposal 1 or 2 or 3. So if the company is liquidated immediately, bank will collect a maximum of 30 million, thereby losing 15 million. Bank has given overdraft of 45 million. Your exam is around the corner. November diet is even not third week. It's second week in November. Both the lecturers and the students, we must run speed. Not trying to scare anybody, but try to alert us that, look, let us assume that we need to speed up. So we need to leave our comfort zone. Let me see what is here. Where do we get the proceeds from? The assets were disposed now. If you liquidate a company and you sell the asset, won't you get money? You sold property for 65 million. You are going to get cash. You sold plant for 21 million. You are going to get cash. That's proceed. When the company is liquidated, what happened to the asset? The asset will be disposed and money will be generated. Money generated will be used to settle the liabilities. We need to move on. Now, proposal 2. Or proposal B. Tayo limited offers. Let's go and check the question. Tayo Limited has made an offer to take over the entire business activities of PL, Pecon Limited. Under the terms of the offer, Able Bank will receive 80% of the balance due, but repayment will not be made until exactly 1 year from the date of the creditors' meeting. No further interest will be considered to accrue on the balance due to Able Bank. Now, the question is, what is the balance due to Able Bank? Let me ask the class. Let me take the extent to which we follow this class. What is the balance due to Ebu Bank? Let me hear from the class, please.
45 million.
How much?
45 million.
45 million, correct. Amount due to Ebu Bank is the overdraft balance. Please note, loan notes is not issued by Banco. The only amount due to Ebu Bank is 45 million. So you calculate 80% of 45 million. I'll come here. 80% of 45 million. That should give us 36 million. But Ebu Bank will receive I'm trying to get my eraser. Receive 36 million in 1 year's time. If proposal 2 is implemented, Ebu Bank will receive 36 million in 1 year's time. That says 80%, but that will be paid exactly 1 year. We now go to proposal 3 or proposal C, reorganization and capital reconstruction. Let's go to this. Let's go to this, please, 1 minute. Let's continue. Let us look at proposal C, reorganization and capital reconstruction. I got to mute this person again. Let's go on. Now let's listen to this. The management of PL is planning area profitability. So almost immediately, the reorganization will be linked with a capital reconstruction scheme. All right? Will be linked with under this scheme, shareholders will be asked ₦1 share every 5 shares.
Your line is
Go and treat
breaking.
this. It's breaking. I'll always come back. If you see me pausing, I'm just waiting for it to increase 100%. Won't see. It's moving to like 50. It will break. Continue the lecture. Now let's explain this. Now says existing shareholders will be asked to accept 2 shares in exchange for 5 shares. So if you have 5 shares before, we are going to give you 2 shares. That means we have reduced your shares by 3. We are going to ask you every share you have. So if I give you 2 shares and I collect 5, have reduced your shares by 3. So let's go and implement this. Our share capital. Issue share capital, ₦1 each. So we are for every 5 shares, we are going to ask you to accept 2 shares in exchange for every 5 shares currently held. Let's implement this working out. Working 1. Share capital. The share capital is affected here. You have your quantity. You have your value. Shares. Assume 30 up. This is not okay. Let 30 up. Naira amount 30 up. Our existing shares. Trying to pick my pen. Existing shares. We have 50,000. 1 naira. Value 50,000. The examiner now says, we are going to ask you to collect, to accept 2 shares in exchange for every 5 shares. That is share reclassification. Reclassification now. Two over 5 multiplied by 50,000. You can close this up. I don't need this again. This will give you 20 million
20.
shares. The investment that was 50 million has been reduced to 20 million. Recall, we said existing shareholders may be asked to give up some of their shares under capital reconstruction. The existing shareholder can be asked to relinquish parts or all their shares. This investment has been reduced by 30 million. Back to the question. The bank will be asked to accept 10 million, 1 naira shares as consideration for 1/2 of the present overdraft. That means you want to convert 1/2 of overdraft to equity shares. Overdraft is a liability. Overdraft is a debt. A debt is being converted to equity shares. So let us determine 1/2 of the present overdraft. The present overdraft is 45 million. Please compute 1/2. What do you have?
33,750.
3 what?
33,750.
1/2 of overdraft. That's not correct.
22.5.
Is 22,500. If I return here now, conversion of overdraft 1/2, 1 to equity to shares. Shares that was 10 million. 1 naira amount 10 million. So Matthew, 1/2 simply means half. 1/2. He didn't say 1.5. Come here now, look at it. We can put a note here. Working to 1/2 of overdraft. Overdraft balance 45 million is equal to 22,500. Converted to equity shares of 10 million. That means the balance of overdraft outstanding, if 1/2 is converted to equity, then the outstanding balance, outstanding overdraft balance is equal to 22,500 outstanding overdraft. We have treated that. Let's continue. That means Ebu Bank is now part of the shareholder. Under reconstruction now, under capital reconstruction, PL is offering Ebu Bank shares that are worth 10 million as consideration for 1/2 of the bank overdraft. So that cancel 1/2 of the overdraft. Let me give you shares that are worth 10 million. So Ebu Bank is now part of the shareholders in the company. We continue. I just try to go back to the question because some students might be on the road. Yes, you have to go to office. What can we do? Continuation. If this proposal is acceptable to the creditors, the shareholders have indicated their willingness to take up a further 30 million naira shares, 30 million 1 naira shares for cash. The shareholders has agreed to buy additional 30 million shares. If the proposal is acceptable, the shareholders has agreed to provide additional cash of 30 million to buy shares in the company. And the balance remaining outstanding to the bank will be repaid from the proceeds of this issue. Out of the money generated from the new shares, we are going to settle outstanding overdraft balance. Let's treat this. You come here, under share capital, we now have new shares. New shares, 30 million, 1 naira each, total 30 million naira. Sum up 20 plus 10 plus 30, 60 million shares. Naira amount 60 million naira. These new shares will go to the shareholders, the existing shareholders. They will produce 30 million naira cash. From this cash, we are going to settle outstanding liability. Look at it. Able Bank will receive a cash of 22.5 million immediately. We continue.
Hello, sir, Mr. Shoju.
Yes, please.
Please, sir, how did you get the 2/5 that was used to multiply the existing shares under reclassification?
You have the question.
Yes, sir.
Look at it. Under this scheme, the existing shareholders will be asked to accept 2 1 naira shares in exchange for every 5 shares currently held. For every 5 shares you have, we are going to ask you to accept 2 shares for every 5. We are going to ask you to accept 2 shares in exchange for every 5 shares you have. And I'll try to explain this as you have 5 shares before. We are going to collect 5 shares from you. We are going to replace it with 2 shares. So if you have 50 million shares before, how many shares are we going to give you now? That is where we get 2/5. Is that better, please? I hope that is better.
Yes, sir. Thank you, sir.
But let's go on. The directors are confident that if this proposal is put into effect, profit of 40 million, 500,000 per annum will be earned for the foreseeable future. Please look at that statement. If this capital reconstruction is put into effect, directors are confident that the company will generate a profit of 40 million, 500,000 for the foreseeable future. Out of which 2/3 will be paid out as dividends and the remainder reinvested in the business. Let's go and treat this. Somebody is asking where do we get 10,000? We said 30 up. That is 10 million. We return here. Return here now. Working 3. Profit statements. Examiner says profit of 40 million, 500,000 will be generated. Out of this profit, we are going to pay dividends. Dividends payouts 2/3. Please compute 2/3 of 40 million, 500. You are going to have 27 million. Please reconfirm.
Yes, sir. 27 million.
We are out of this profit. We are going to pay our dividend, 27 million. We are left with what? Retained profits.
13.5.
13.5. Retain profits. We are going to pay out 27 million to our shareholders as dividends. An examiner says this profit is for the foreseeable future. That means the profit continues after year 1, year 2 for foreseeable future. We now need to share the dividends to the shareholders. We are going to share 27 million naira dividend to our shareholders. Who are the shareholders now? Look at the shareholders. Existing shareholder. The original shareholder, they have 20 before. They also buy or they bought 30 again. That becomes 50.
Yes, sir.
Bank overdraft, that is Egu Bank now. 10 million. We now come here. Share of dividends. We have the original shareholder. They now have 60/60. We have shares. Bank now control 10/60. If you now want to share the dividends, you are going to share based on percentage holdings. I'll come here. Multiply by 27 million. How much dividends will shareholder collect?
22,500.
Collect bank, they will collect
4 million, 4.5.
4.5 million. Dividend received. Because they are now shareholders in the company, they are entitled to dividend payment. Right? Pollution.
Yes, sir, please. Good evening, sir. Sir, please, can you explain why the Able Bank is receiving a cash of 25.5 million? Because I'm thinking that since they said that the shareholders have indicated their willingness to take up a further 30 million
30
shares.
million shares.
Yes, sir.
So why is what? Then you put something, why is?
Yes, so I'm asking that why is the cash 25.5?
Why is the cash
Yes, why?
25.5?
Yes.
Okay. The cash is not 25.5 million or 22.5 million. The cash received is 30 million. Out of that cash received, we are going to pay the balance due to Able Bank. The outstanding balance. Let's go to that note. Look at it. If this proposal is acceptable to the creditors, the shareholders have indicated their willingness to take up a further 30 million shares for ₦1 each for cash. And the balance remaining outstanding to the bank will be repaid from the proceeds of this issue. So the question is, what is the balance remaining outstanding to the bank? Felicia, are you there?
Yes, sir, 22.5. Okay.
Out of that 30 million, we paid out 22.5 million to bank.
Okay, thank you, sir. That's what I wanted to understand.
All right. And please, so don't go and deduct the money from that 30 million. No. Share capital. That 30 million your share capital will remain 30 million. Assuming we have to open cash accounts, that 30 million will go to our cash account. For our cash accounts, we are going to pay overdraft. So it is your cash account that will reduce by 22.5 million. The investor has invested 30 million. The share capital will not change. It is your cash and bank account that will reduce by 22.5 million. But we don't need to show that here. We don't need it. What we are trying to determine is how much we able bank receive. We can return here. Wow.
Questions.
Let's increase the margin. Please hold on. I require some space here. Oh, you don't have here? Okay. I have to do it, so I'll need it.
Questions, sir.
Felicia, please, can you raise down your hand? Yes.
Questions, sir.
All right, sir.
Okay. This 10,000 is supposed to be 10,000. Why are you using 10 over 60 instead of 10,000 over 60,000?
Oh, yeah, use 10,000 over 60,000.
Yeah, you will get at the answer. That is what I'm saying.
So use your 10,000 over 60,000. What do you have?
You will get the answer, sir. But why are you putting it 10?
You see, in exam, when you get to exam, remember you are battling with time. Your 10 million, you can just abbreviate and move on. This is 1,030,000. Instead of picking the 090, you are consuming your time. The exam is asking for your smartness. As soon as you put 10, you are telling me this 10 million. This is 10 million. The exam is asking for your what? Smartness. If you want to put 10 million, put the 90. It won't change your answer. But you cannot blame anybody because that time we continue to move. Once you observe, in fact, you can do 5/6 and 1/6. The exam also tests to what extent is this student smart. So you can do your 10 million or 10,000. I still need this space. This space is not enough. I'm still going to solve the B parts. All right, let's continue. Let me do one more so we can continue. But let me copy a longer one. So please, in your exam, like I said at the start of this question, before you rush to any question, at least have a reasonable knowledge of the requirements. Let me just hold it. Let me give on for all right. My pen. So if you look at Able Bank now, under this reconstruction, Able Bank will receive 1, cash immediately, 22.5 million. 2, year 1 to infinity, dividends received 4.5 million. Look at this side. Able Bank is now part of the shareholder. Able Bank will receive dividends in year 1 and in subsequent year. Examiner says that profit is for foreseeable future, not just only for 1 year. The directors are confident that if this proposal is put into effect, a profit of 40.5 million will be earned for the foreseeable future. That means if the company earns profit of 40.5 million every year, Able Bank, being a shareholder, will continue to collect dividends from year one to perpetuity. This sign that look like 8 is year one to infinity. This is infinity sign. So our summary. We are done with the 3 proposals. Let's look at the summary. Summary of results. We have year 0. That is now. We have year 1. And we have subsequent year. For proposal A, Able Bank will receive 30 million immediately. That is year 0. Immediately the company is liquidated. Able Bank will receive 30 million. Not in year 1, not in subsequent year. For proposal B, Able Bank receive nothing in year 0. He will get 36 million in year 1. Nothing in subsequent year. For proposal C, Able Bank will collect 22 million immediately. That is now, year 0. He will get 4.5 million dividends, year 1, and dividend in subsequent year. We have calculated. Examiner says, for each of the proposal, calculate amount received by Able Bank. We have calculated. We are done with requirements A. Able Bank will receive cash as follows, or as shown below. As shown below. We are done with proposal requirements A. We have spent time. Now look at requirement B. Examine the relative financial merits of the proposals from the viewpoint of Able Bank. If you look at this, if Able Bank accept proposal 1, it will get 30 million immediately. If Able Bank accept proposal 2, it will get 36 million after 1 year. If you accept proposal C, it will get 22.5 million immediately and get dividends 1 year and subsequent year. These cash flows are at different time. The cash flow of proposal 1 or proposal A, the timing is different from the cash flow of proposal B. To examine the relative financial merits, we need to determine the present value of each proposal. To examine the relative financial merits of the proposal, we need to calculate the present value of each proposal. Because the timing is not the same. If I'm giving you 30 million naira today and 36 million in 1 year's time, which one is better for you? We are not sure yet. 30 million immediately or 36 million 1 year. In that case, you are going to take these cash flows to their present value to reflect time value of money. To compute present value, examiner says notes. Look at the notes. Assume that bank earns 15% per annum on all its lending. That is bank's cost of capital or bank's return. This 15% becomes your discount rate. Anytime bank invests money, it must get a return of 15%. When I come to this, Have I picked my pen? Yes. Okay. Calculation of present value of each proposal using bank's rate of return 15%. You have your Naira sign. You have proposal A. The cash flow, 30 million. For convenience, okay, let me put 30 million. This cash flow will come in here immediately. Year 1, year 0. Our discount factor at 15%. This cash flow will happen at let me put here. But that will be another issue now. Let me put here. Year 0. Discount factor 15%. Present value. Year 0 means immediately. The discount factor here is 1. 1 multiplied by the cash flow. This is 30 million or so. Proposal A. Proposal B. The cash flow is 36 million. That will happen in year 1. %15 discount factor year 1.
0.86, 0.870.
Multiplied by 36 million. What do you have?
31,304,348. 48.
48. 00. Is proposal B. Please, let me take 30 up. For convenience, assume 30 is up.
So that should be 31,304,000.
3 what?
304.
Oh, 304.
Yes.
So how are you getting 304?
Yes, supposed to be 31,304,000.
It is 31,
It says
320.
1,320,000. Yeah, 320.
Please give me a figure I will use so that I can move on.
31,
320.
Without
320.
round up, we give you 304.
No, it's 320. It's using 3 decimal place.
All right, let's settle for 1. You now go to proposal C. Proposal C. Immediately, Able Bank will receive 22.5 million. That is year 0. Discount creates 1, or discount factor 1. This gives me 22. Okay, close this. Close this. 22,500. Then we have dividend of 4.5 million for year 1 to infinity. We need to calculate present value of a cash flow for year 1 to perpetuity. How do we calculate it? Present value of a cash flow for year 1 to perpetuity. Please note, the present value of a cash flow for year 1 to perpetuity is calculated as the cash flow divided by the discount rate. The cash flow here is 4,500. Assuming 30 up. Our discount rate is 15%, 0.15. Work this out. The examiner say dividends will be received for the foreseeable future from year 1 to the foreseeable future. In that case, you are going to calculate present value of a cash flow from year 1 to perpetuity. To calculate present value of a cash flow from year 1 to perpetuity, take the cash flow, divide it by the discount rate. This will give us
30 million.
Assume 30 up, 30,000. For option C, total 52,500. We have seen the relative financial merits. We have examined the relative financial merits. We can now comment. We can now compare and comment. We have brought all the cash flows to their present value now. Which option is better or is best?
Proposal C.
Assuming to recommend. Which proposal do you think is better?
Proposal C.
Why?
It's giving a higher cash flow. Higher rate of
it
return.
gives
Higher return.
Higher rate of return.
it gives
Higher
higher present value. So for that reason, you are choosing proposal C. That's not sufficient. What about the risk?
High risk.
A capital reconstruction. What happens if the reconstruction fails? Have you thought of that? If you are going for proposal C, it gives us proposal C gives the highest present value and is the most risky option. Is the most risky proposal. If the profit forecast turn out to be wrong, or if the capital reconstruction fails, bank will only collect 22.5 million. We said proposal C gives the highest present value, but is the most risky option. Is the most risky option. If the reconstruction phase bank will only receive 22.5 million. Okay, I'm trying to copy this. All right, let me copy this. I can't be typing this now. Please hold on, I'm trying to paste. All right, look at the screen. offers the highest return, but it is perhaps the riskiest option. If the reconstructed company fails to make the expected profits, the bank might only receive 5 million. On the other hand, if the reconstruction succeeds, the bank will make a profit on its current overdraft investment. Proposal B is marginally preferable to proposal A, although there are some risks that Tayo Limited may default on payments of its debt. Proposal B is marginally better, marginally preferable than proposal A. But Tayo Limited can default payments. Proposal A, liquidation, is the least risky option and offer the lowest return. The choice between the three proposals will depend on the judgment of the management of Ebu Bank, and in particular, an assessment of the degree of risk with each option. We are done with this quest. And we are done with the topic. Any question, clarification? All right. On Saturday, last Saturday, I suggested an assignment. Page 105, question number 3. Polar PSC. Only one student has submitted. Please, let us go back to that assignment. We have solved 2 questions on capital reconstruction. Out of the 3 questions, we have solved 2. Now, let us attempt 1 question on our own.
We'll try and submit it to you, sir.
All right, may God give us a better understanding. I will be checking out of the classroom. Let's have a blessed evening. Good night.
Thank you, sir.